Hello everyone and welcome to the debut episode of the A&H Berts Stockpickers Podcast. I'm Hubert.
And I'm Albert. Here, each week, you can join us in discussing our favourite stocks.
Each episode, we will unpack the investment thesis for one of our favourites. We will alternate between one another. And as our podcast progresses, you will see us building up our individual top picks list.
Each week, one of us will put forward a pitch for a favourite stock, showing why it should hold a spot in your investment portfolio. This will be followed by a discussion to pry open the investment case, with some pushbacks to show you listeners all the sides of what this stock could offer.
So now a little background on us, your hosts. Albert and I are both in our final years of our undergraduate degrees. I'm at LSE and Albert is at Durham University. While we're still relatively new to the world of finance, we are both equity investors, and I spent my last summer interning on an equity broking desk.
And without further ado, let's get right into this week's pick.
Right, so today I'll be taking the hot seat with my absolute favourite stock right now. It holds a solid position in my portfolio and has been a gem of the mid-cap space. For anyone who has spoken to me this past month knows exactly what I'm about to say. But for anyone else, I look forward to introducing you all to Games Workshop PLC. Right, so let's get cracking. For anyone not in the hobby sphere, and for anyone who hasn't really been in the mid-cap space for the last 10 years, you probably have absolutely no clue what I'm about to talk about. So let me give you a quick rundown on what Games Workshop is. So this is a small company based out of Nottingham that designs, manufactures and sells little fantasy figurines for tabletop play. And just to sort of whet the appetite a little before we move on, if you were to invest in this stock 10 years ago and your friend invested in Apple, you'd have made more than double your money. This has been one of the best performing shares over the last 10 years. And it has grown to a market cap of around 3.9 billion. So to move on, we're going to be looking at three key points to my investment thesis. We're going to start with looking at the actual fundamentals of the business and why it has performed so successfully in the past and why it's done so well in the last maiden results. Moving away from this, I want to look at the broader image and see how this stock and this company is able to maintain its success and how it has done so for 40 years. And then finally, I want to talk a little bit about the potential for future growth. So, first of all, the results speak for themselves. When we're looking at the figures, this just does shine beautifully on paper. We are looking at a 184% return on capital over the last year. This was at 94 last year, and the previous year was at 100%. So for those of you that don't know what I'm talking about when it comes to return on capital, many of the old investors, especially people like Warren Buffett and Charlie Munger, would say that in the long term, it is the company's return on capital that is the key to its fundamental long-term success. And the management of the business strongly consolidates this. Not only is it their showing off method on its site, it boasts about its return on capital, but also it consolidates this with strong returns into the investment space. So they are looking at reinvesting all the cash they make, or trying to reinvest the majority of the cash they make. So we're looking at about 6 to 10% of sales reinvested into capex each year, which then precipitates in high returns for the business of that 100 to 184% return on capital. And looking at the pure figures of the business, we are looking at something like around a 72.73% gross margin. So that means, in terms of the costs of goods sold, they are making over 72% return on each individual item purely on an accounting basis. Now, this is an incredibly high figure. And just to illustrate how they're able to do this, because it just does sound, too good to be true, what they fundamentally sell is little boxes of plastic figurines that have yet to even be constructed. So these are just purely molded figurines, which cost mere pounds to produce, and they sell them at extortionate figures. So, a standard box of 5, Albert, would you agree with me? Like a little box of 5 comes in around 20 to 40 pounds at times?
Absolutely, it can do.
Yeah, so at the end of the day, it seems to be the biggest cost there is just the metal mold, which, is one fixed cost. And then beyond that, we're just looking at sort of basic cheap plastic. And, like I said, this does look too good to be true. So why hasn't there been another competitor? Why hasn't anyone else entered the market? And that's sort of moving on to my second point. They have been able to stay in this position because over the last 40 years, they have not only built one of the greatest backstories and histories of any fantasy game, they have also built a network of players. Because again, fundamentally, to play this tabletop board game with these little figures, you do need to have a strong network. So if over the last 40 years no new entrant has made it successfully into the market, we don't think a new one will. Not only will it be hard to capture a new audience, it will be very, very challenging for a new entrant to even create a story close to that Games Workshop offers. And if we look at it, this strong brand loyalty has basically got consumers to buy little box figurines, construct them, paint them, and play with them for the last 40 years, as was mentioned. So, do we see competitors? No. And thus, looking at the same trajectory the business has gone, we can, see this business maintaining those margins and maintaining the high return on capital moving forward, which is really the key point of the investment thesis. I mean, Albert, you know some people in the space. Do you think there's anything else coming in? Or is Games Workshop and the Warhammer sphere still staying at the top of its game?
Yeah, so one issue that I've seen around social media boards that are geared towards Warhammer is an issue relating to copyright infringement. And it appears that Games Workshop have made it a copyright infringement to make any fan content referring to or has anything to do with Warhammer. This has understandably angered many fans. And has led to many of them calling for a boycott. So this could mean that Games Workshop may be starting to lose favour with its fan base.
Yes, that is an interesting point. That is something that has been happening, over the last month. However, I think this does provide more of an opportunity than a cost, because fundamentally the company has survived for 40 years and they have had quite strong sort of intellectual property concerns and rights, whatever. But at the end of the day, I think the business will do what's best for its fans and try and maintain its customer base, as they do boast on its website. So seeing as we have seen no fundamental change in the company's fundamentals, I think it provides a buying opportunity, seeing as this has caused or potentially caused the recent flat trading of the stock over the last month. And I mean, looking forward, I think what we're looking at is a lot of these customers, might be slightly annoyed with what's happening right now, but they are so heavily invested. I mean, we're looking at an audience which typically tends to sit around the 25 to 35 age. So these are guys with pretty decent disposable income. And I mean, it's not uncommon to see some of these guys rack up over $1,000 every year just building an army. So they already have a really strong investment in their Warhammer portfolio, if you can call it that. So despite this, I think we could still see consumers buying strongly, because it would be a waste of their money if they just stop playing the game. We just don't think they will.
Right. So you think that that this will sort of be looked back on as a blip in the company's sales?
Well, exactly. And I mean, if we look at the last maiden figures, we have actually seen about a 30% increase in revenue sales, and that is across nearly every region we've seen an increase. So I'm not too fast, and I'm not too concerned by this. I think this is more just fans getting we're looking at the most sort of intense fans getting a little bit riled up. But I'm sure Games Workshop will get on the case, as they usually do. Like I said, if you look across their website and on the investment pages as well, they are just solely committed to providing the best service for their customers as possible. So we expect this to turn around very soon.
Yeah. So looking longer term, do you think that Games Workshop will continue to attract new players, new younger players to their figurines? Because as everyone knows, the video gaming industry has become absolutely huge recently. In fact, overtaking the film industry in its size. So, do you think that there's a chance that younger players will stick with their video games and not really move into this world of plastic figurines, which, as fans get older, could present a sort of generational problem for Games Workshop.
I mean, that is a very interesting point, and I know it's one that's often raised to me when I talk about this stock to people who don't, understand the game so well. If you look at the customers they already have, first of all, the biggest driver of growth tends to actually be established customers, because once you start, I mean, we both played the game. When you start, you're looking at spending, I don't know, £100 a year on this sort of stuff. But once you really get involved, this is sort of the third, fourth, fifth year of playing the game where you really start to spend the real money on the stuff. So for the time being, I think we're sort of all right in that sphere. In terms of video games, I just think this is a product which is so niche and unique that it's not about capturing, the mainstream. It's about capturing the niche, and that's again what it specializes in. Management echoes the same sentiment. They have no intention of moving into sort of the game sphere, and I think fundamentally it would be at a detriment to them.
I think here it could be possible to draw a comparison with Lego, which people were pessimistic about how this company's sales would look in the face of video games and electronics. That children wouldn't want these plastic bricks anymore. But those predictions have proven wrong, and in fact Lego's sales of their plastic bricks has remained strong. So it's possible it could be a similar thing going on here, where we think that this may go into decline in the face of digital competition, but actually just in spite of that, it remains strong.
Well, yeah, exactly. I agree. I think this not only provides a game to play, but you have to bear in mind that this is also a full-time hobby. It's the construction and the painting of the figurines that is one of the biggest attractions of many people. When I got into it when I was a lot younger, I mean, I played video games, but it was really that sort of creative side of what Games Workshop's product has to offer that I think is really its key selling point. And there will always be young people who will take an interest into that artistic side as well. And if you look at the sphere, actually, sort of I'd say most players of Warhammer are also video gamers themselves. Would you not agree?
Yeah, there's definitely an overlap there, and of course, they're not mutually exclusive. You can buy these figurines and you can play online games as well.
Yeah, so I think as long as it maintains the fact that it's a niche product offering that's differentiated from all pretty much other video games, and takes board games to a full hobby level, I think we should be okay in that sphere. I mean, look, you sort of mentioned what its trajectory for growth is. I think I should now touch on sort of my third point to my investment thesis, which is I think we could see a very strong growth story in the Asian market especially. Now, this is something that is still not fully tapped into, and I think there's a lot of space for fantasy in Asia. I mean, looking at a little case study, which is slightly different, but illustrates my point, which is the film Warcraft, which came out, absolute disaster in the UK and US, but somehow managed to gross, I think, 156 million in the first 5 days in China alone. There are around 740 million gamers, of which fantasy is quite a big genre in China, and that is a big market to potentially access if they catch on to the Games Workshop offering. I mean, if you just look at the figures themselves, around 5 years ago, the American market was worth around, I think we're looking at 600 to 700,000 in terms of sales. Now we're looking at 59.4 million in sales in the US alone. So if we look at that growth in the US itself and then map it onto China and Asia, I mean, 5 years ago, the Asian market was completely non-existent. And last year, I think 2020, we saw that grow to 6.5 million. I think this year it grew even more to around 9 million. Let me just double check that figure. 9 million. The last was the result from the last maiden sort of set of results. So, I think there is potential in Asia, and if we can capture even a fraction of that 740 million in gamers through Games Workshop, we have fantastic portal to growth, and I just don't think this Asian, potential has been fully appreciated by the market yet.
Yeah, I suppose that given just how much it's grown in in the West, it is future growth will probably be dependent upon breaking into new markets, as opposed to expanding in the West. So why do you think that Games Workshop will be successful in a completely new market, which I don't believe that they have very much experience in yet? So what are they doing to break into this market that makes you think that this will be a successful endeavour?
So I think first of all, they've done it very successfully in other markets before, and the way they have really done so is by actually making themselves quite localized, and they do this through two main sort of sales routes. So what they call the trade route, where they basically distribute to local retailers, which understand the market very well and can advertise properly, and that actually does account for the vast majority of sales for the business totally. But what's really interesting is how Games Workshop utilizes its stores and seeks to set out new stores in these regions. I think if we look at the last set of results, one of the biggest forms of capital expenditure of the business were setting up new stores, new physical stores. And while they're not the biggest, most profitable part of the business, they actually are the source of new client acquisition. Most people walk past the shop and walk in. I remember when I was about 10, 11 years old, I mean, there was that shop in Brent Cross, and I literally just walked past, and I was just drawn in to see what on earth was going on there. It looked really interesting, and it is the shops themselves and the vibe and the community there that gets people in. So I think the fact that they're setting up new shops in these new markets is going to be a way to get people in, and they're doing it locally.
Yeah, I guess I guess those shops are really a big draw to the hobby, because they have the front of the shop is always decorated with superbly painted figurines, and the staff are always very enthusiastic. So I guess a lot of it will be dependent on being able to successfully recruit these people in these new countries, and try and just draw in younger potential gamers from the street and into these shops. Could you say potentially that because of the importance of these shops, and the lack of digital footprint of Games Workshop, that a decline in brick and mortar shopping, which has been a trend for many years, could mean that Games Workshop will have more trouble in reaching new clients and potentially have to move online?
I mean, interesting you should say that. First of all, just looking at the shops themselves in isolation, Games Workshop has a very, very lean business model when it comes down to them. Like, unlike some other businesses which tend to be a bit lackluster with their general retail side, Games Workshop is very brutal. I mean, when a single shop starts to lose any form of profitability, they will cut costs drastically, and if need be, they will close shops whenever it stops being profitable for them. So they're only going to be there if they're making the business money. But in terms of the online space, it's already starting to thrive in the online space. I mean, we saw online sales in 2020, looking at around 51.7 million, and the last results of 2021 showed online sales totally were around 87.7 million. So already they are it's a strong driver of growth is the online sales part. And I think the online stuff is actually a really big driver of growth in sort of domestic markets, because it is, again, one of the big things Games Workshop do, and you can see that in the return on capital figures, is they like to stretch out that profitability. Top line is all good and well, but they're very, very good at reducing that bottom line and just growing margins year on year. And the online side does provide an opportunity to do so, and it definitely seems to have attracted customers in the UK over the last year. Sort of the sales revenue from the online sphere, I think, has almost doubled. Nearly. It's nearly a double. The same goes for continental Europe and North America. So if we start to see this trend, slightly sort of flowing into some emerging markets, the Asian markets, again, this provides another easy way for people to access the products.
Yeah. So what I mean is in terms of attracting new customers to it. Yeah, of course, existing customers will, especially recently, if it's become more difficult to visit in-person shops, will move to the online space. But in terms of attracting these new customers, do you think that they'll have a way to reach this, to understand it, if these shops aren't getting the footfall anymore.
Okay. I mean, in that sort of sense, I think this may provide a slight novelty as well. There is a novelty factor to the fact, to these businesses, to this business actually being, in person in many ways. I mean, I don't think realistically the high street is going to completely die altogether. There will still be shops around, and people will go to them. And the thing about these shops, it's not like a usual shop you go to just to buy something. It is actually a place to play the hobby as well. So there will always be enough. I think there will always be enough people at the Games Workshop shops to play with each other. That seems to be the main activity that goes on.
Yeah, definitely. Yeah, I can't see that disappearing because again, it's an in-person game.
Exactly.
So that will stay around. Yeah, so I guess it is really if these shops do manage to maintain this kind of community feel, which I have every reason to believe that they will. And I guess it is safe even with the brick and mortar model.
Exactly. If as long as the shops stay open, I think people, passers-by, will still have the opportunity to be intrigued and walk in. That is the main point. I don't think most people new to the game who have never experienced it before actively seek out a Games Workshop. It seems to be something you tend to stumble upon. So as long as they have the ground, the base level of customer footfall to stay in business, then we should be fine on that front.
Okay. So do you think there are any other risks to the business, or?
Let me think about that. In terms of further risks, I think you've covered quite a lot of them there. I was going to mention them, but you sort of you jumped the gun there, which is brilliant. I think end of the day, it is about a faith that these consumers will keep buying and that there will still be an appetite for this hobby space. Which in many ways I still think there is, especially given the modern day, everything's so digitalized, so it provides a nice pastime for people who like gaming and like the fantasy sphere to do something that isn't so screen intensive and a little bit therapeutic in many ways. But yeah, potentially there is always that risk that people just get bored of the game, but 40 years of success shows otherwise.
Yeah, for sure.
And yeah, so
we hope you enjoyed this week's discussion.
So yeah, let us know your thoughts on this week's pick. I hope we covered it in enough detail. And in the comments and in our social media, let us know any questions you'd like answered in the next episode.
If you have a suggestion of a stock you think we should cover, please let us know.
And we'll see you next week for another episode. I believe we are covering a company called we're looking at Anglo American next week, aren't we?
Yes, that's right.
Amazing. Join us next week. Thank you very much.
Goodbye.